The number of home sellers at risk for selling at a loss has increased over last year, and it's not just here in Phoenix. We're seeing this in a lot of areas of the country, some areas worse than others. So we're going to take a look at that today. Also, how home prices have actually come down and why this market is becoming impossible for first-time home buyers, even though these prices are starting to come down. So let's get into it. Thanks for joining me today, you guys. According to Redfin, 6% of today's home sellers are at risk of selling at a loss. That's up from 4.4% a year ago, still historically low. So it's up slightly from a year ago, but still not really trending in the right direction for sellers. Now, this isn't a surprise. We've been talking about how home prices have started to come down, especially this year, specifically here in Phoenix, but we are seeing it across the board in most states, some worse than others, some trending in a different direction, actually, in particular the East Coast. So not super shocking news, but when we think about what has happened with the market between 2020 to today, so much increase happened in prices over a few years, and then things went down a little bit, kind of leveled off. But if you're someone who bought your home during that time period, you may not have a lot of equity, especially if you bought towards the end of that time frame. And if you are forced to sell for some reason right now, you're likely not going to make a lot of money on that sale. In fact, you might actually lose money. So that's what this article is talking about. They're saying the risk of selling at a loss varies significantly in different parts of the country. Nearly 20% of sellers are at risk of losing money in San Francisco. 0% of sellers are at risk in Providence, Rhode Island. So like I said, the East Coast is performing much better than the West Coast right now, generally speaking. The thing that is getting hit the hardest, though, are condos. And I've talked a little bit about this for the Phoenix market as well, because we are definitely seeing condo and townhome sales kind of behaving differently than the rest of the market in terms of slower days on market, lower prices, taking a hit more so in prices than other types of properties here in Phoenix. Nearly 1 in 10 condos are at risk of selling at a loss, and 30% of condos bought after the pandemic are at a risk. 16.4% of sellers who bought their homes after the pandemic are at risk of selling at a loss in today's market, compared to 9% who bought during the pandemic and 1.8% of those who bought before the pandemic. So again, it's really looking at that evolution over the last 5 years, because we saw such a big change in prices over that time frame. So depending on when you purchased during that time and whether or not you have to sell now, you may be at a higher risk of actually losing money on that sale. Now, they go on to say that if home prices were to fall by 1%, the overall share of homes at risk of selling at a loss would increase to 6.4%, and that share would increase to 10.1% in the unlikely event that prices fall by 5%. So we've talked a lot about home price predictions, and the latest kind of general consensus has been that home prices will be going down by 1% by the end of 2025. And so this is saying if they fall by 1%, the overall risk of home selling at a loss would increase to 6.4%. Now, they talk a little bit about their methodology, saying that they're looking at the MLS. They're predicting how much a home is likely to sell for based on the sale to list price ratio of that metro area. They also say they're not taking closing costs into account. So the methodology is a little bit loose here because they can't truly predict what these homes are going to sell for. They're looking a little bit more, generally at what those trends are. So with everything, there's a little bit of variability in this. I would take it with a grain of salt to some extent, but it is no doubt that we are seeing price softening, and therefore, depending on when you bought your home, you are at risk of losing money if you have to sell now. So according to the Cromford Report, home prices are establishing a firm downward trend as we prepare to exit the second quarter of 2025. Now, they do say there's no sign of panic among sellers. They defend the values of their home, and I can agree with that. Whether I'm speaking with a buyer or a seller, I can tell that many sellers are are pretty firm on their price. There's not a whole lot of desperation out there, which becomes very frustrating to buyers because they're watching this market and thinking, there's got to be a breaking point here. And a lot of sellers are really kind of testing the market. So they say despite this, they are at an increasing disadvantage when negotiating terms with buyers, thanks to the excess of supply over demand. So the Cromford Report is looking at prices at everything from the active listings to the ones that are under contract, and then of course closed listings too, so we can look at these overall trends. And so average dollar per square foot of listings has declined 2.4% over the last month. So that is active listings. That's what we're seeing out there on the market. So obviously what sellers are actually listing for and expecting to get for their home has come down by 2.4% over the last month. So that's very encouraging for buyers. The average dollar per square foot for listings under contract has declined 0.2% over the last month. So those are those homes that are already under contract. It's that group of homes is now at a lower price under contract than we saw a month ago. And the monthly average dollar per square foot for closed listings has declined 1.7%. So that's those actual sales prices. We've seen a decrease month over month of 1.7%. Not a huge change, but certainly, with looking at all of these numbers, there is a trend of these prices ultimately going down. If we look at it in terms of the monthly median sales price, that's declined 0.3% over the last month, from $451 to $449.5. So, not a huge change when we look at that monthly median sales price, but we can see from this data that all of those points are trending downward as it relates to, list price, under contract price, and then actual closing prices. Now, they talk a little bit about how we are starting the third quarter now, and historically, the third quarter is not the strongest time for the market, particularly for sellers, because we tend to see weaker home prices. Now, a lot of that is due to the top end of the market slowing down during the summer months, but they are also saying that there is some good news for sellers because we are seeing active listing counts stop increasing. I'm not saying they're going down, but they've stopped increasing. So they say there's also bad news in that those listings are not seeing a declining trend. They're not going down. They're just holding steady, and demand continues to slowly drift backwards. So we're still seeing the separation of supply and demand in the market here in Phoenix. Now, they make a bold statement here about prices, saying in this environment, it is unlikely that we will see anything other than further price declines over the next 3 months. So that's something to think about if you're a seller. Do you want to sell sooner than later, knowing that prices are ultimately going down? It seems pretty certain from what the Cromford Report is saying and reporting. And as a buyer, if you have not found the one yet, waiting a couple months might be in your favor. Now, they do say a sharp reduction in mortgage rates could change the trajectory of this, and we have seen some improvement in mortgage rates, and we're going to talk about that in a little bit. Now, just to show you what all of these price trends are looking like on a graph, we have the monthly average sales price per square foot here. You can see where we stand today at about $295 as of June 25th, and then where we were kind of at the peak at this year on February 25th, we were at $316.80. So obviously seen a pretty big decline in that monthly average sales price per square foot over the last few months. Now, if you're wondering what the median home price is in your city, whether you're a buyer or a seller, that information might be helpful. Check the description below where you can request that information, and we'll get you the median home price in your area. Looking at those active listing counts, just to give you a visual, where we stand today is 26,019 active listings. You can see it's about a 4-week trend now where we just really haven't seen a ton of movement in active listings. They're not going down, they're not going up. So, good news, bad news, depending on how you're looking at it. One question I get all the time is, why are home prices so high? And this article gives some insight to that. I wanted to share. This is from Yahoo Finance. They're definitely looking at this from a very broad perspective, but they are talking about how the American dream of owning a house may be vanishing. And this is because higher housing prices and a decline in housing affordability. They do quote an article that came out on May 11th of 1978, where they said the median selling price of a house hit an all-time high of $44,300. And that was in 1976. Now, fast forward 4.5 decades, the median price of a home is now over $416,900. So why are prices so high? So they talk a little bit about things that we've discussed on this channel many times, demand outpacing supply. Obviously, the pandemic years really threw us into a pattern that we had not seen before, where there was very little supply and kind of outrageous demand. And that pushed up home prices, and it's taken a while for us to kind of reset. With that, also a longstanding lag in building. There was a notable slowdown in housing starts in the wake of the financial crisis in the early 2000s. During this period, the market was flooded with foreclosure properties, and supply far outpaced demand. In reaction, builders were reluctant to forge ahead with new construction projects, catering to first-time buyers. Now we really need those homes, and they're not there. So builders have been kind of conservative since everything happened with the financial crisis, and really didn't build up enough inventory to where when we had this boom of demand, we just didn't have the housing supply. And it depends, different areas of the country have a little bit more supply than others. So I can't say, overall, we haven't seen enough supply, because some areas do have that, but particularly for more affordable first-time home buyer type of options, that's a little bit more rare to see. So that was the first part of the reason why home prices are so high. And now the second part they're saying is because of the rate lock effect. So we got ourselves into a situation where we had 3% mortgage rates, or even below 3% at one point in time. And everyone was scooping up all of these homes. And now no one wants to sell if they don't have to, because their payment is going to be so much higher with today's mortgage rate. So that's kind of put a halt on everything now, still kind of constricting supply to an extent. Again, we've seen a big growth in supply over the last 1 to 2 years, but still constricting supply a little bit to where we're not opening up a lot of homes that maybe would have otherwise been opened up if sellers weren't locked into these super low rates. Now, on that note, I said I was going to talk about how brutal the housing market is for first-time home buyers. So let's take a look at this article, what they're sharing about that, some of those specifics of the first-time home buyer experience. And before I get there, if any of this is helpful for you, consider subscribing and share this video with someone who would also find it helpful. I would appreciate that. One chart shows how brutal the housing market has become for first-time home buyers. Real estate market is still stuck in low gear halfway through 2025, and for first-time home buyers, the situation is tough with rates and prices stubbornly high. Something we talk about on this channel often. They say even as fresh data points to the U.S. housing market turning in buyers' favor, first-time home buyers are struggling to break in. So you can see here the share of first-time home buyers has declined from 50% to currently 24%. That's a pretty sad statistic. In 2010, 50% of all homes sold were purchased by first-time home buyers. And today when we look at that, that is completely cut in half at only 24%. So even as we've been seeing increasing inventory, prices have not come down to the level that a lot of people actually expected. And with that, rates haven't budged all that much either. So we're in a situation where things can be pretty unaffordable for many people, particularly first-time home buyers. New home sales plunged by almost 14% in May, another data point showing the deep freeze that the U.S. housing market has fallen into. They're saying 44% of consumers believe it is a bad time to buy a house because of high mortgage rates and tight credit. That was published in May of this year. It also noted that 34% of Americans have said that if they were to move, they would rent. So part of the problem, as they're saying, is also this so-called lock-in effect. Current homeowners are hesitant to sell. They cling to low rates that they locked in during the pandemic era. And then we also have economic uncertainty. So there's a lot of barriers, particularly for first-time home buyers, to really get off the fence and jump in. And I totally understand that, whether it be fear and uncertainty or just the inability to save for a down payment or even be able to pay a mortgage when you look at the prices and mortgage rates combined. So what is going on with these mortgage rates? Because for once I have some somewhat good news in mortgage world. Mortgage rates take another step towards April lows. April 3rd and 4th saw the average top tier 30-year fixed rate well into the mid sixes. Many lenders were able to quote 6.5% at that time. And just a few days ago, there were still ways to go before breaking below those early April levels. But the past few days have taken us within striking distance. So where we're at today with rates, this looks like a very pretty chart here. 6.67%. You can see we've come down quite a bit since the last peak we saw at 6.9, which was at the beginning of June. So made some good movement over the last month. So if you're a buyer out there, this is positive news for you, and even positive news for sellers, because this means there's going to be a little bit more activity out there. Fingers crossed if buyers can see a little bit more affordability. Now, our team has worked with a number of buyers and even on the seller side with homes with assumable mortgages, because that's a great alternative to dealing with today's mortgage rates. So there are some particulars that you need to understand with assumable mortgages, and not every home has an assumable mortgage. But if this is something that interests you, check the description below. We have a guide to how assumable mortgages work, as well as a list of homes that are available for sale with assumable mortgages. Now, today, according to the Cromford Report, we are at 71.8 on the CMI. The CMI is giving us an idea of housing supply and demand in the Phoenix metro area. Any reading below 90 is considered a buyer's market. 71.8 buyer's market throughout Phoenix metro, but I will show you where we're at with every major city here in just a second. Demand is at 76.9, so we're about 23% below normal on demand. And supply continues to remain above normal, 7.1%. Above normal for supply. But as we were looking at with active listings, we're not seeing that climbing. It's kind of hanging out there. We still have this big discrepancy between supply and demand, which is putting us into a buyer's market. So buyers have a lot more choices and leverage and negotiation power. But keep in mind, there are a lot of sellers out there that actually don't have to sell and aren't willing to change their price to a level that they, need to sell. So there's still some firm sellers out there. It's definitely not a bloodbath by any means. So on the buyer side, you do have more leverage, but you're not going to see that with every single listing. Now, as we look at every single major city here in the Phoenix metro area, that's a lot of red arrows, meaning that month over month, the CMI went down in all of those cities. It moved closer to a buyer's market, whether it was already in a buyer's market or it was in a balanced market or a seller's market. The momentum swung further towards buyers in all of those cities except for Paradise Valley. It went up by 15%, and this is mainly because Paradise Valley lost a lot of supply because it's higher end luxury, and many of those sellers take their homes off the market during the summer because there's not as much demand for that. So now there are fewer listings in Paradise Valley as compared to the buyer demand, and that is why we saw a positive change there. But every other major city, definitely weakening. The overall change in the CMI month over month, that average change was negative 2.7%, which is about the same as last week. So not a big change in, any particular direction with the CMI with all these major cities. But as I shared earlier, as we're looking at the number of active listings, we're looking at prices, we're looking at demand, it is expected that we'll continue to see price softening over the next 3 months. The contract ratio heat map hasn't changed all that much. Still seeing a lot of green, a lot of blue, which indicates balanced and cooler markets. We've got Chandler, which is warming up a little bit, 85283 as well. And then we also have Phoenix 85023, all zip codes that are seeing a little bit more heat, likely because the number of supply in those areas has probably gone down a little bit as compared to the demand. Our team has spoken with a number of buyers and sellers in the last week that are actually thinking about either listing their home or starting the home search. We'd be happy to talk with you further about this process as well. So if you'd like to just understand your options, what that looks like in this market, check the description below. We have a link to set up a discovery call with our team. And as always, thank you for joining me on this Wednesday market update. I will see you guys all next week.